Hello, traders, and welcome back to the Forex Geek, where we dive deep into the tools that can help you make smarter trading decisions. In today's video, we're going to be talking about the Average Directional Index, which is also the ADX, and how to build a powerful swing trading strategy around it. The ADX indicator is one of the most effective tools for measuring trend strength, yet many traders either overlook it or use it incorrectly. By the end of this video, you understand exactly how to use the ADX to identify strong trends, avoid choppy markets, and time your entries and exit with precision. This strategy has the potential to dramatically improve your trading results. So I encourage you to watch until the end to capture all the key details that will help you implement this approach in your own trading. So without wasting much of your time, let's get started. So first, I will define the ADX indicator and its components. So the average directional index (ADX) is a technical indicator created by James Wells Wilder to measure trend strength. Now, this James Wells Wilder is a very popular trader, and he also created the RSI. So unlike most indicators, ADX doesn't show trend direction, only how powerful the current trend is. The ADX consists of three lines on your chart. So we have the ADX line. Just gonna set. Okay, look at it here. We have the ADX line, which is this purple line being used here. And we have the positive DI line. And this, okay, the ADX line measures the overall trend strength. And we have the positive DI line, which tracks upward price movement. And we have the negative DI line, which tracks downward price movement. So the ADX readings range from 0 to 100, with higher values indicating stronger trend. So you have below 20, which is this level. Let me make it a thick line so we can see it. And you can see that line clearly. That's the 20 level. So below 20 means no trend or sideways market. Now 20 to 25 indicates emerging trend. Above 25 shows strong trend present. Above 50 is exceptionally strong trend. So this is very, very important, especially for swing trading. So the 14 period setting is the standard for ADX. So you set it at 14, the length should be at 14. Remember that ADX is a lagging indicator. It confirms existing trends rather than predicting new ones. When ADX rises, trend strength increases, regardless of direction. When ADX falls from higher levels, the trend is weakening and may soon end. Or maybe it could just be a pullback, like we have here. I'll explain it later as we progress. Ensure you watch until the end because I'm about to talk about the strategy right now. Now, for the strategy, the first step is to identify strong trending markets. And now, how can you do this? You can use the ADX to do this. The first rule of the strategy is to only trade when the ADX is above 25, confirming a strong trend is present. So this single filter will help you avoid the frustration of choppy range-bound markets where most traders lose money. So the first step is to wait for the ADX to cross above 20 or 25, which is this line here that I've marked. Let me use 25. Remember, above 25 means strong trend. So we have the ADX crossing above 25 here. Now you should only engage the markets when the ADX is above 25 and not just when the positive or negative DI is above the other, depending on the trend. You should not just trade based on the positive and negative DI. You should trade based on the strong trend to avoid choppy markets. So now once you've spotted the ADX being above 25, you should also check out for the trend direction. This is where the positive and negative DI comes into play. When the ADX shows trend strength, after it has shown it, we need to determine direction using the positive DI and the negative DI lines. For bullish trends, when the positive DI is above negative DI, it shows that we are bullish. And when the negative DI is above the positive DI, it shows that we are bearish, just like we have here. We have the negative DI being above the positive DI. It shows that we are bearish in the market. So we should look for entries. Now, once you have seen this happening, the next step is to wait for pullbacks. Remember, this is swing trading, so it should be on the 4 hour or on the daily time frame. I'd recommend the 4 hour time frame. So you should wait for pullbacks. Once you've identified a strong trend and you've determined the trend direction, just like we have done, wait for pullbacks. Now, pullbacks are very essential. Instead of chasing the market, wait for a pullback to a key support or resistance level. And you can use the 20 period EMA to get this. So let me just quickly add our EMA. Now you should know that this EMA is optional. You can just use your intuition or your trading knowledge and just spot support and resistance levels. But the EMA, the 20 period EMA, can help you to spot pullbacks when price returns to this dynamic support and resistance line, which is this 20 period EMA. You can engage the markets. So after spotting this, we spotted this around here, our confirmations, we spotted them here, which is the same area here. So we should wait for price to give us a pullback to this line. Now you can see price giving us that pullback right here. Just gonna zoom into that right here, and at the same time you can see that bearish engulfing candlestick pattern, so showing that we should be looking to sell. So this is very, very important. Don't just, once we've spotted this on the chart, just jump in. No, you should wait for a pullback, and you should wait for candlestick patterns and indications, clues that indeed we are about to sell. So after that, you can place your sell order in the next candlestick, your stop loss above the swing high or above the candlestick high, the bearish engulfing candlestick. Now, after you've placed your order, you should sell. We are actually selling for short positions. Place stop above the recent swing high or above the high of your entry candlestick, just like I've explained. And for your take profits, you could just take partials at 1:1, or you could aim for fixed risk to reward ratio of 1:2, 1:3. You can also use your 20 period EMA to trail your stop loss. We have price breaking that 20 period EMA here, so we could just exit the trade when we have that break to the upside. So using our EMA as a trailing stop loss, we just exit when price breaks the 20 period EMA, like it wants to go back up. So that is how I would have been able to take this trade. And also you can see you have price returning back below 25, the level 25 here, showing that this trend isn't strong enough again. So we should be looking to either take profits or look to buy, or actually close this position, this sell position. So that is how would have been able to take this trade using the ADX. ADX, remember we're talking about the ADX strategy here. So let's look for a buy setup. A setup where we could buy. Okay, I've seen one very clear example which we can use for this video. Now, the very first step is to wait for price to give us a push above wait for the ADX to give us the push above level 25, and we have that happening right here. At the same time, you can see that here. This is great. Now the next step is to confirm your positive and negative DI. Remember, so the positive DI, you can see it being above, so the positive DI being above the negative DI. Now, after this, you should know the next step is to wait for pullbacks. Now, this is why I would advise that you should also use significant support and resistance levels. You can see the momentum here was very strong, so we are not able to tap into price. But price that are giving us pullbacks here, minor pullbacks. So we just use this support level to actually enter for a quick scalp. 1:2 or 1:3. Our stop loss below this key level, and I'll take profit at 1:2, as I would have been able to scalp using this strategy. Remember, the trend is still a strong one. We are way above 50, showing that this trend is extremely strong. So we have price declining here. So we just look to just set break evens here, or partials, look to take partials. So that's how you can use this to trade. This is a very wonderful example. We have here price going above 25 here, showing us that this sell trade currently going on, this break to the downside could actually indicate a strong trend for sales. Price is above 25 and the negative DI is above the positive DI. So we should look to enter. We have a significant key level here, which is the former support level turn resistance. So we just look to take our sell trades here. Or you could just use as price came back to the and tapped to the 20 period EMA, you could also enter your sell trade, whichever one you choose. But the main aim is to look out for pullbacks in the market and enter from pullbacks. You have another quick 1:2 here. I just spotted this one. So that's how you can use the ADX to trade the market. It's very simple. I advise you to study the charts and come back and give us a comment below about your experiences. We want to hear about everything about your experiences. If you found this video helpful, don't forget to like, subscribe, and turn on the notification bell so you never miss out on more trading tips and strategies. Thanks for watching, and I'll see you in the next video.